Bitcoin is down by at least 26%, and it already lost $600 billion worth of market cap. But this is just the beginning. It is going to get a lot worse. Last time Bitcoin dropped this much was back in April when Donald Trump announced universal tariffs on every single nation. Investors expected a recession, the market crashed, and it took down with it the crypto market. But this time, it is crashing for a completely different reason. This time, it is going to be way worse than it was back in April. But on the other side, it is a great opportunity because it will come back to $100,000 and maybe more. It will go down to as $50,000, $40,000, or even $30,000. And if you think that I'm exaggerating, let me prove it to you. The value of Bitcoin reflects the value of cash. An economy usually works in cycles. When we are in a period of an economic boom, when getting a job is easy, when companies are offering really great incomes, that's when the economy is growing tremendously. Very high spending leads to high inflation. High inflation reduces the value of cash. So people don't like to sit on cash. They like to put it somewhere and invest it. But because there is so much spending in the economy, the stock market is booming. So if you have cash and the market is booming by 10%, you could invest it and make 10% on that investment. So the cost of holding cash is 10%. Why would you hold cash when you can get actually 10% instantly? So nobody wants to hold cash. Cash becomes much less valuable. Now take the opposite scenario. When the economy falls into a recession, into a crisis, when jobs are going down, when it's difficult to find a job, when they report the jobs report and you're like, oh, that doesn't seem like true. Everybody is getting fired. So you have less money in your pocket. So you're less likely to spend money on Amazon. You're less likely to buy that iPhone. Because everybody is spending less, the economy is not growing as fast. So the stock market isn't growing that fast. So instead of 10%, it might be growing by 2%. So suddenly, the cost of holding cash have actually went down dramatically. Inflation is slowing down. So holding cash suddenly becomes more valuable. If we take all the assets in the market, we can divide them into two major categories. On one side, we have safe investments. A safe investment has a predictable return. So if you buy this asset, you know that it is going to make X amount of money. Its value is not going to go down dramatically because everybody knows that it is going to make that much money. Take US Treasuries. US Treasuries have, for example, a 5% yield. When you buy that, you know that you will have your $1,000 at the end of the tunnel. And you know that you will make 5% on that. Or take real estate. The price of real estate often holds its value. In fact, over time, house prices rise. And if it's in a very attractive place that you can easily rent out, then it might have a return on investment of 5, 6, or maybe even 7%. So that is a safe investment. On the other side, you have risky investments. Risky investments don't have an exact return. We're speculating on how much this investment can possibly make. It could make a lot of money, or it could make no money at all. Take Palantir. It is worth like $500 billion, but it's making about $1 billion or two. But investors believe, or some investors believe, that Palantir could be making hundreds of billions of dollars sometime in the future. But that is speculation. It could make that much money, or maybe it won't be making that much money. And that's why it's a very speculative asset, and that's why it is considered a risky investment. Speculative assets aren't always easy to sell. If the market is booming and people are filled with cash, yes, you can easily sell your speculative bitcoins and crypto and Palantir stocks. But when there is a recession and there is a crisis, people have less jobs, less incomes, they're very less likely to spend that money. So your speculative assets is suddenly very difficult to sell, so its price falls down. On the other side, if you have cash, cash is more valuable because cash is tied in a recession. And crypto is a very speculative asset. And because our economy right now is headed into a recession, it is very normal and natural that crypto prices are falling down. If you summarize it, high earnings leads to a very strong demand in the economy. A lot of spending leads to very corporate high earnings. If you spend your entire paycheck on Amazon, Amazon's next financial reports will show that Amazon made a lot of money. It is going to increase its valuation and lead to a market rally. Market rally means that everything is growing and people are more likely to speculate. So speculative assets such as Palantir and crypto in general are going to rise. But if people are making a lot less money, like right now, demand goes down, which means that less earnings for companies. Next financial report shows that Apple sold less iPhones. The market falls, especially speculative assets. The first assets that people sell in the market when there is a crisis are the speculative assets. The assets they don't know for a fact if they are going to pay off in the future. What makes crypto crash much worse is leverage. Leverage is the ability to multiply your gains or multiply your losses. Imagine you start trading with $1,000 and you buy $1,000 worth of Bitcoin. And let's assume that it is going to grow by 10%. 10% on $1,000 is an extra $100. But if you leverage your position 10 to 1, that means that you can multiply your profits by 10 times. So instead of just making $100 on that investment or a trade, you will make $1,000. Great, fantastic. If the market is growing, you're 10xing your gains. That pushes the price of Bitcoin to rise. That attracts more buyers of Bitcoin, which is going to lead to a self-fulfilling prophecy and keeps pushing the price of Bitcoin to increase. But what happens when the price of Bitcoin falls? Ideally, if it was just 10%, you're losing $100. So you can exit your position with $900. However, if you have leveraged your position 10 to 1, you're losing 10 times the amount. So you're losing your entire $1,000. That's why when the market falls, that leverage position or an over-leveraged market is going to reinforce losses and pushes the price to crash much bigger than it does usually. And if the price keeps falling, more investors began to sell, which is going to lead to a much bigger crash. Crypto is regulated in the United States, so you can leverage your position 10 to 1 or 50 to 1 or 100 to 1. But most of the crypto exchanges are registered outside the United States, and people trade crypto all across the globe. So it's not just the demand from the United States, but the demand from everywhere else around the globe. And since there are places where you can leverage your position 50 to 1, a small drop in Bitcoin price is going to force these people to sell their entire portfolios, which is going to lead to a huge supply of crypto in the market, but very limited demand, which is going to lead to a huge crash. Leverage positions 50 to 1, 30 to 1, or sometimes even 100 to 1 are normal in the crypto market. That's why Bitcoin could continue crashing. But the real question is that, will it crash to $0? Will it just evaporate the entire value of crypto? The short answer is no. The price of Bitcoin depends on this pyramid that you see in front of you. We have multiple types of investors in crypto. At the top of the pyramid, we have retail traders. These are small little traders with limited amount of money who are trying to make a living by trading crypto. They might buy some crypto, they might buy Bitcoin or Ethereum and try to predict the price of Bitcoin. Sometimes they make money, but most of the times they lose money. These people often over-leverage their positions. So whenever the price of Bitcoin or crypto falls down, these are the first people who are going to suffer. And these are the first people who are going to lose most of the gains that they have made during a crypto rally. Below them, we have institutional traders. There are large companies who take investors' money and trade crypto, and then they share the profits with the investors. These people often have millions of dollars, sometimes hundreds of millions of dollars, and they make huge bets and they actually make a lot of money, but they also lose a lot of money. When they see that the price of crypto is falling down, they are going to exit their positions as soon as possible because they're not long-term investors in crypto. There are traders. They make a living by trading crypto. And if the market is falling down, what is the point of holding so much crypto? The best thing that you can do in that position is to short crypto. But in general, they sell. And if they sell, it is going to crush the price of crypto massively. Below institutional traders, we have buy and hold gang. These are early investors, believers in Bitcoin, believers in crypto. They have purchased Bitcoin, Ethereum, or other coins, and they haven't actually purchased them to make short-term gains. They haven't purchased them because they want to profit tomorrow. They believe in this technology. They might have developed some of these technologies, and they're holding forever. These people believe that the price of Bitcoin isn't just going to cross $1 million per coin, but rather $1 billion per coin, and Bitcoin will take over the entire world. Because these people keep holding their assets, the price of Bitcoin cannot possibly fall below to zero because there is a certain demand. These people are creating the real demand for them. Below them, we have institutional investors. Those institutional investors such as BlackRock, Fidelity, JP Morgan haven't been there prior to 2020 or 2021. They don't invest in one specific crypto, but rather these are ETFs. So BlackRock's ETF in crypto invests in the top 50 or in the top 100 cryptos. Yes, sometimes they adjust their portfolio, but they don't sell them just because the market is crashing today. They don't adjust their portfolio just because there is huge fluctuations in the market. These are ETFs provided for people to invest in crypto long term. So as long as there is demand from institutional investors such as Fidelity and BlackRock, and there is a good number of buy and hold gang who keep investing in crypto, the price of crypto cannot possibly go below a certain extent. But when the economy is going to hit the rock bottom and it starts to grow again because the Fed lowers interest rates, the markets are going to rise. That's when cash becomes less valuable and people will start buying more speculative assets. And that's when the price of Bitcoin could actually rise back to $100,000 or even beyond that to $150,000. The sky is the limit. So don't panic.